Good morning, everybody. It's Wednesday, February 26th, 5:28 a.m. Central Time. Grain markets are mixed this morning. May corn futures up 3/4 cent at 4.95. May soybeans down 3.5 at 10.45 and a quarter. May Chicago wheat up a quarter at 5.88. May Kansas City wheat up half cent at 6.06. May spring wheat down 2.5 at 6.26 and a quarter. We had some social media circus yesterday. Let's start off there.
We sure did. U.S. Representative Thomas Massie posted a controversial comment about ethanol on X. In short, the Kentucky Republican argued that ethanol subsidies and mandates should be excluded from the Republican reconciliation plan because using corn for fuel increases food prices. Massie, a farmer, has served in the House for over a decade. He was one of several considered for the role of Secretary of Ag in the current administration. In the past, Massie has advocated to reform the USDA, the U.S. Food and Drug Administration, and the Centers for Disease Control and Prevention.
This is a little tone deaf the way it looks to me. I guess if you're a farmer, you should maybe be happy that this was not the ag secretary pick. Ethanol in the United States, of course, is a huge deal. In the U.S. last year, farmers grew almost 15 billion bushels of corn. And of that 15 billion bushels, we're going to use about 5.5 billion bushels for the production of ethanol. So it's a huge deal. Mackenzie, one of the best things about our show is that we're independent. We don't have any sponsors. We've had lots of offers, but we have no sponsors. Nobody pays us to do this. But you might argue that in a roundabout way, ethanol is a sponsor of ours because the people that pay for our premium subscription allow us to do this. And they are largely farmers who are supported by ethanol. So we'll admit that maybe we're a little bit biased here. Ethanol has a lot of positive traits. It helps us toward energy independence. Massie didn't mention the DDG component, that when you grind corn for ethanol, you get not only ethanol, but DDGs, which are used as animal feed. Ethanol can help to stabilize or reduce fuel costs. Ethanol burns cleaner than gasoline. There's a lot of positives here. Here's another thing that Massie went on to say. Only those whose production costs of corn are lower than the market price of corn should be growing corn. I have a really good chart about that. Let's address the first part, though. The Renewable Fuels Association responded to this, and I think this is a response. They didn't mention him. They should have, but they didn't. They said, let's talk about ethanol and food prices. Two things to consider. First, there's no connection between ethanol and food price inflation. Second, there is a strong correlation between oil and food prices. And they've actually got some really good charts. I think I could have done better ones, honestly, but this is pretty good. And the important thing to look at here would be the time frame from, like, say 2007 forward, where we produced a ton of ethanol, but food prices were pretty damn cheap. So I think they've got a good point here. And then the second one is that food prices are more closely tied to crude oil. And I think that makes sense as well. To jump back to his second tweet here, this was a response to somebody else. Only those whose production costs of corn are lower than the market price of corn should be growing corn. Mackenzie, farmers in this country are going to plant, I don't know, somewhere between 91 and 96 million acres of corn this spring, depending on whose estimate you'd like to use. And most of those farmers are eyeing costs or margins that are break even, probably at best. Maybe there's some guys that'll make money. There's a lot of guys that are going to plant corn looking at negative margins this year. Here is a really great chart from my friend Chris Barron at AgView Solutions. This is ROI trends from 2012 through 2023. And you can see there's a big valley there, 2015, 2016, 2017, where margins, and this is across Chris's customer base. This is not reflective of every U.S. farmer, but margins were basically like non-existent. They didn't exist. As a matter of fact, without government intervention or payments during those years, margins would have been negative. So I think that Thomas Massie needs to be careful what he wishes for here, because if this is what actually happened, if farmers stopped growing corn when there was no margin, we'd run out of corn. Our safe food supply ceases to exist, and we have big problems. So I think that he got ratioed on X pretty hard by farmers and ethanol advocates. There's definitely another side to this argument, but again, we're a little bit biased toward ethanol. So that's the route that we're going to go with this. What's up next?
Corn futures held technical support on Tuesday prior to a bounce. The most heavily traded May 25 contract bottomed near 488 per bushel prior to a close near 494. Tuesday marked the third consecutive lower close for the contract. The contract trades 24 cents from its recent high this morning. Traders continue to discuss the prospect of drastically increased U.S. corn acreage ahead of USDA Ag Outlook Forum data that that will be released tomorrow. USDA will release its annual Prospective Plantings report on March 31st. The more accurate planted acreage report will be released on June 30th.
Okay, so that trend line, if you guys are watching that we held yesterday, that's pretty sneaky. But in any case, this for the moment, I'm going to call this a correction, a flush out, a washout. Weak length has to get flushed out. Corrections are healthy and necessary. Maybe this thing got ahead of itself. Now, if you break out or down below, call it that 484 level, and you stick in this May contract, I think that would be a very bad look. But for the moment, it looks all right. We do have some data pending. Ag Outlook Forum numbers, I believe, will be out tomorrow morning. And is that going to move the market? I don't know. Maybe intraday. It shouldn't be a trend changer, though. Like if they print something high for corn acres tomorrow, and keep in mind, those numbers aren't based on surveys or anything. They're just guesses. I don't know why that would be a trend changer. Even the March report is one of USDA's least favorite reports. They'll be the first to tell you that it's not super accurate. Really, that June acreage report is the bigger deal. So for the moment, I'm looking at this as a correction / washout, but I don't know that the bull trend has been busted just yet. But we're kind of skating on thin ice here.
Sovacon revised its outlook for Russian wheat exports. The consulting group estimates this season's wheat exports at 42.2 million metric tons, lower than the previous forecast of 42.8. The estimate is 4.5% lower than the average for the previous 3 seasons. Analysts are concerned about the limited snow cover across much of this season's crop that has left it exposed to upcoming frosts. Wheat exports for the 25-26 season were slightly increased to 38.9 million metric tons, up from 38.3.
I don't know if Sovacon is accurate here, but I'm more interested in their new crop export forecast. And if this new crop export forecast, 38.9 million metric tons, which it was higher than their previous estimate, but it would still be down. If that's confirmed, it would be down 15% from this current marketing year and down 30% from the 23-24 marketing year. So if you get into a situation here where Russia is exporting drastically less wheat, like, 30% less wheat than they were 2 years ago, that may open the door for some other exporters, like maybe the United States, maybe somewhere else. Maybe it helps to tighten up the global supply and demand situation a little bit. Russia's projected to account for 22% of global wheat exports this year, but that percentage even could be lower next year. And there's a lot of moving pieces when it comes to global balance sheets and supply and demand, but I'm going to say that this is a friendly factor. We're not going to get our first look at USDA's 25-26 balance sheet until May, I believe.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Pete Meyer joined me for 49 minutes of uncut grain market discussion yesterday. We talked about grain marketing. We talked about markets. We talked quite a bit about biofuels. We talked about the acreage situation or debate. Are 95 million corn acres priced in? That is, I think, the question at this point, or what sort of acreage number is priced in. Pete gave us his thoughts, which are slightly different than my thoughts, but that's what makes a market, or in this case, a video show. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. We send 2 emails per day to our premium subscribers. One goes out at 5 a.m. Central Time. That email includes everything. It's our 6 most recent premium videos, all the headlines for the day, tons of charts, graphics, all of my cash grain marketing recommendations are at the bottom of the email every single day. If you guys are looking to simplify your grain marketing this year, this may be a good place to start. We don't really push you to do any sort of trading or futures or options. We don't really even want to talk to you. We just want to send you our info for $50 a month. And I think you'll get a lot out of it. Go to standardgrain.com, sign up this morning. We do credit card, Google Pay, Cash App, all that stuff. Takes like 30 seconds. Give that deal a shot, and I will forward you a copy of this morning's email.
Mexican officials are meeting with the U.S. government this week to discuss trade policy before next week's tariff deadline. Mexican President Claudia Sheinbaum stated on Tuesday that a deal is expected to be reached to avoid a potential trade war. She also said that if an agreement is not reached, Mexico was prepared to implement retaliatory tariffs. Canada has also stated that it is prepared to impose a broad range of tariffs on U.S. exports from Republican-leaning states if needed. Trump stated on Monday that the planned 25% tariffs on Canadian and Mexican imports will proceed as scheduled next week.
Well, I don't know, what is Trump still trying to push negotiation here, or is he really going to slap the tariffs on? I don't know.
I would say he's pushing negotiation.
I think so too. We're just concerned about this, and we continue to monitor it because, of course, Mexico has been the top buyer of U.S. corn this year by a wide margin. And the last thing that our crowd wants to hear is Mexico tariffs U.S. corn, because that would be very, very bad. I hope that that's a headline that we don't have to report at any point in the future.
Gold prices plummeted on Tuesday. Spot gold declined by 1.4% early in the session, falling to its lowest level in more than a week. The decline comes one day after gold reached an all-time high on Monday. Uncertainty surrounding President Trump's proposed tariffs combined with recently released weak economic data caused prices to fall. The latest Commitment of Traders report revealed that gold speculators cut their net long position by 14,000 contracts. Even though speculators still hold a net long position exceeding 200,000 contracts, the decline suggests that gold's upward trend may be stalling.
I'm just going to call this a correction. I don't know that you need to read. I know that like the news wires, you read articles and they'll give you 5 different reasons. This is why gold was down yesterday. Sometimes markets correct just because they need to correct. And the gold market has been awfully strong. You look at this weekly continuation chart. What do we have? 6 or 7 weeks of higher consecutive weekly closes. Sometimes pullbacks are just healthy and necessary, even in bull markets. I'm going to go with that notion for the moment.
The S&P 500 and the NASDAQ notched their 4th consecutive day of losses on Tuesday. Over the past 4 trading sessions, the S&P 500 has fallen about 3.8% and the NASDAQ has dropped roughly 4.5%. Tuesday's further decline was driven by the Conference Board's Consumer Confidence Index for February, which dropped to 98.3, its 3rd consecutive monthly decline. Consumer confidence has declined due to concerns that Trump's proposed tariffs could lead to higher inflation and a possible recession. Also on Tuesday, the 10-year Treasury yield fell below 4.3%, its lowest level since December.
I don't think the equity bulls are shaken in their boots yet. We're still up year to date. This is still a healthy looking bull trend to me. That being said, the stock market has a lot of room to correct to the downside while maintaining a bull trend. Longer term, I think that COVID low from 2020 is important. And then the 2022 bear market lows are important. And that trend line is important. If you ever went down and tested that, I mean, that'd bring you down to what? 4,800, 5,000 in the S&P. I mean, that would be a substantial correction. And honestly, like year in and year out to see a calendar year correction at some point during the calendar year, that's like 10 or 15%. That's not crazy. I think that's more normal. So I'm not ruling a correction out. I think it's premature to say that that's where we're headed. What did cattle do yesterday?
Cattle futures were higher. Live cattle saw gains ranging from 60 cents to $1. Feeders were $1.77 to $2.07 higher. Box beef was also higher. Choice gained 59 cents at $3.1432, and select was up 16 cents at $3.0413.
U.S. dollar's up a little bit. The S&P's up 32 points, trying to claw its way back in the futures. Bonds are off a little bit. Gold's up $10. Crude oil is up 5 cents, and the April WTI at 68.98 last trade. Have a great day, guys. We'll be back on Thursday.